Hello, guys, and welcome to this edition of Woman to Woman. I am your host, Anntricia Bray Smith, your professional mentor and speaker. It is indeed a blessing and a pleasure to greet you here on this platform today as we're continuing in season 3 talking about financial education. And so today I come here so that we can talk about how you can introduce and or include your children in learning financial education, because we know that this is a family affair. This is not no one size fits all. And whatever we do to create a financial legacy for ourselves, we don't want it to die with us. So today we're talking about how to include your children in financial education, financial literacy, financial independence, financial freedom. So you guys, the things we learn, we want to teach it to our children. It's just natural that when we learn something and it's good to us and it's good for us, we want to share it. And so we don't want to continue not having the discussion as it relates to finances at the kitchen table. And I say at the kitchen table, I know we don't all sit down at the table, but we're sitting down somewhere, whether it's in the car, whether it's on the porch, whether it's on the couch. We're sitting somewhere, and at some time or another, we must get intentional about introducing finances to our children, because it's not going to be enough with just us having all this knowledge and we're doing all the steps to move toward financial independence or financial freedom, and we don't share the knowledge with our children. And so me personally, my children are up and grown. And so I'm having to reach them on their adult level. You listening or watching this broadcast, you may have children that are small. Maybe you're just starting your family. Wherever you are, I want today to draw all this information in to share with you how you can start introducing financial education to your kids and what steps to take. So I'll start. So we know that some families have young children. So we're looking at even from infancy to those toddler years, those early school years. So let's look at the age from 0 to 5. So from 0 to 5, those are the impressionable years where our children are dependent on us for everything. And I know that if you listen from the beginning of season 3 up into this episode, you understand that it's not at all about the amount of money that we have coming in and going out, because up until this point, you should have been able to go in and look and create a good working budget that will allow you some flexibility into putting some type or some form of financial plan in place for your young child. And so whether you're expecting, whether now you have a toddler, whatever that looks like, let's start creating a financial plan for the 0 to 5-year-old. And so what that looks like is these children are very young children who may or may not understand what money may even be. They're dependent on us. And so what that looks like is from the time your child is born, we should be setting some financial things in place. And one of the things that I encourage people to put in place for their children 0 to 5 years old is some form of life insurance policy. With the child being so young, you can usually get these policies for little or no, for very little money per month. And so having this plan in place really acts as a financial defense in the event that something happens, an accident, something that is unexpected. And we know that in today's time that we're living in, unexpected things are hitting us all the time. And so there's just as many kids that have come up ill and are taking their last breaths in today's time as we've ever seen it before. And so my first thing that I want to encourage parents to do with young children is to implement a life insurance plan. That's a good way of setting your child up for financial legacy. Having that plan in place, having something in place that in the event that something happens, that you can rest assured that this is in place. Another thing for 0 to 5-year-old is I encourage opening a savings of some sort. Notice that I said savings and not in an investment. This is a good place to start. And when I say savings, I'm not saying you have to just come up with this magic number to go open up a savings account. As young as an infant being born up until the age of 5 years old, there's always a way that you can start saving. And many of that is in our own household, what we used to call the piggy bank. You know, we can get containers to start collecting our change and allow that change to build up over that period of time from 0 to 5 years old. Allow that change to build up in a container inside your house until you feel comfortable enough going to the bank or the credit union and opening up an account. And let that account be designated for your young child. So that's 0 to 5 years old. So it's not going to take a whole lot for us to really implement that. So if you're listening and you have a child or even a grandchild, maybe you want to start this for a grandchild from 0 to 5 years old, that is just a good place to start. It's just a good place to start. So let's look at the school age child, those school age children from 6 to say 12, 6 to 12. Let's look at 6 to 12. Now, these children are learning. They model or they mock or they intimidate the things that we do. You know, they watch us, they want to speak like us, they want to dress like us, they want to really model everything that we do. And so one of the things that we can do to implement as far as finances is start giving those age 6 to 12 a budget, providing them with a budget when they go to the store, when they know that they're going to be able to make purchases and be able to do a little shopping and exercise some independence of their own. You want to start by giving them a budget. And so if this is our first step into introducing children age 6 to 12 about money, this is a great place to start, because when they go to the store with us, they want to make purchases, they want things, and in their minds, money is just at their disposal, at their disposal. It's indispensable. So a good place we can start to introduce financial awareness to those children age 6 to 12 is that when we take them to the store with us. We have a conversation prior to going to the store about what their budget is. Let's say, for instance, I have children during the summertime. And every now and then I like to treat those children for and reward them for being such great kids through the week, and so I want to take them to the local Dollar Tree, or I want to take them to the snow cone place, or I want to take them to Walmart or one of the other stores in town. And I want to reward them for being such great help to me for the week, in following the rules, in taking their naps, in doing their assignments that I have for them during the summer months. And so one of the ways that I do that with all my children, I really have to look at them. I consider their ages, and I consider how many of those kids I have for that week. And I look at my budget. What have I set aside in my budget as a gift, as donations, as charity, that can be split and shared for that purpose? And so usually I get the kids together and say, I have 8 kids. I have 8 kids, and maybe I have $50. Or maybe I have 8 kids and maybe I have $20. Or maybe I have those 8 kids and I have $30 to spend. Whatever it is, I'm looking at that budget. I'm looking at my budget, what I have to spend, and where I'm going to take them so that they're able to really become aware about finances. So usually I'm looking at the kids and I tell each of them, you have $2 to spend. I'm taking you to the store and each of you have $2 to spend, or I'm taking you to the store and you have $3 to spend, or you have $5 to spend. And so already they're beginning to process and become aware of the worth, of the value of that money. And so I like to start out at the Dollar Trees where the merchandise is usually just one price. And so they're able to count up, well, if the things in here are a dollar, I know I can go in here, and if I have a $2 budget, I can grab 2 things, usually. And I usually give them a little quarter or something like that to cover their taxes as well. But they begin to understand that it's going to take, they can get 2 things with their $2, and then here's the quarter for tax purposes. And we have that conversation. And so ages 6 to 12, this is a good way to introduce financial awareness, financial education, and get them really thinking about the value and the worth of money. Okay, so it's a good way to do it. So let's look at 13 to 18. 13 to 18, these children, they're getting that awareness, they're becoming more knowledgeable, they're able to add and subtract, they're able to take on some financial responsibility. So between 13 to 18, if you have not already introduced to your child something about financial legacies and freedoms and what that looks like, there are several things to consider. Most of our children are capable at that point to generate ideas for business, a business mindset, something that they want to do, something that they do well, that they can begin to look at opening and running their own home-based business. Whether that's write a book, whether that is designing graphics, whether that is baking cookies, whether that is mowing somebody's yard, whether that is babysitting, their own home-based business, doing hair. I know many young ladies in young men, even now, who enjoy braiding hair and doing things like this. This is a way you can help draw in financial awareness for your teenagers. Something to where they're being productive, something where they can see the fruit of their own labor and begin to generate an income. Then at that point, you can talk to them about opening up a account, a checking account, even a savings account. You can talk to them about opening it up and how to utilize their funds. It's a good way to do that. How to utilize their funds. So you sit with them, create a plan for those fundings that they're able to make and generate, and then how much to pay themselves every week or every 2 weeks or every month, as opposed to the works of their hand. So you begin to share with them that just because they make a quick $25 braiding somebody's hair doesn't mean that you have $25 to spend. This means that you make that money and it sits here, and when it's payday and time to pay yourself, then there's a certain amount of money that you're able to pull from that account. The rest of it is there for your business to support those days that you may not make as much. And so you want that money to be there. Then when they get a certain amount for that week or for that every 2 week or for that month, that they're able to use that money to do the things that they want to do. And if it doesn't fit within that budget, then they'll have to wait until they build up or save up from their earnings to make that particular purchase. Okay, another way we can start teaching our teenagers about money and making them more aware is if they desire money from us and then they ask us for money. This is the perfect time we can teach them about loans and lending. And so, yes, they may want something that is a high ticket item, and maybe they come to us for a loan. Talk to us about a loan. I don't encourage just giving. If it's something that we want to and desire to give for our kids, that's one thing. But when it's something that they're asking us for, let's start teaching them about loans and what that looks like to pay back. Okay, because if they have a business, they're generating their own income and they want to purchase a high ticket item or something that's going to require a little extra money from our pocketbooks, we want to look at that money that they're earning when they get paid. This is a percentage of that they need to pay us back for the loan that we have given them. And so that is a good way to start introducing financial education to our children, ages 13 to 18. And so let's look at these adult children, because mine are grown already. Let's look at our adult children. And one of the first things that I went to reteach my grown adult children is opening up a home-based business. Now, sure, they work on jobs for the most part, or they have a form of income or revenue, or maybe they're in college. But one of the first areas that I taught my children or introduced to my adult children is opening up a home-based business. What does that look like? That means utilizing what they already have to generate a home-based business for them so that they can potentially have income or revenue coming in. So what are some things that our adult children usually already have that they can generate an income from. Most of our adult children have time on their hands. Most of our adult children have a vehicle. Most of our adult children know how to operate technology and use a computer. Most of our adult children know how to do hair and makeup. Most of our adult children know how to mow a yard or iron clothes. Most of our adult children have a mind of creativity, artistic. So there's all kinds of talents that our adult children have. We have to put on their minds and encourage them to use that in a way that is going to benefit them. And so using a talent that they already have to open up their own home-based business, that is a great place to start with our adult children. Getting that money in, knowing how to make money outside of those jobs and school and whatever else that they're doing. It's a good place to start to have that conversation and what that looks like. Another area I started with my adult children is to take them to through the process of opening up their own life insurance policy. See, many adult children we have that have went on off to school and have started jobs or have transitioned into the life of adulthood, many of them are living their lives every day and they do not have a life insurance policy. It hasn't even been a conversation. So that's another place that I started with my adult children. I had an agent come and sit down and talk to them about not only them, but even my employees. My employees are adults and some of them did not have life insurance either. And so it's a conversation that has to be had. So no matter where your adult children are, whether they're 18 years or older, this conversation is necessary. So I had an agent come in and talk to each of them about a policy and what that looked like and what kind of policy that they could have and how much it cost a month. So, and this was something I didn't do for them. This was something that they had to sit down and have that conversation and answer those questions and do all of that independently. Yes, I was there as a support somewhere around if they had a question or something, but for the most part, this was something that they went through the process of their own. I just made it my business to get intentional about having someone be there to take them through this process. And so they're able to do that. Another thing that I think is important for grown children is to open up some kind of retirement fund, some type of retirement plan. Yes, they're young for the most part. My children are young. My children are 22 and 23 years old at the time. Now it's time to think about retirement and what those years look like. Because many of these jobs, whether they're going to college or getting a degree or whether they're just working on the job, many of these jobs, even if they offer a benefit for retirement plan, if they don't stay at that job or if they leave that job and go to another job, many of those benefits don't follow them. And so we have to think outside of just that job because they have a good job today, thinking that that retirement is going to be there even when they leave that job. Many of those benefits, when you leave that job, the benefits are cease right there. I'm even thinking about my mom, who's been on her job for 20 plus years as a nurse, as a medical professional. And now that we're looking at retirement for her and cutting down those hours and making that transition into her retirement years, many of her benefits that she had while being a full-time employee, they're lost as she transitions into her retirement year. So it's no different from our adult children, as they need their own individual plan set in place. They need their own plan set in place for retirement. So what I suggest is talking to someone about a Roth IRA. Let me say that again, a Roth IRA. Having that set in place and having that adult child decide how much money they want to put in that every week, every 2 weeks, every month, and having that money going directly into that account helps protect them in their financial future as they're working on the different careers until they really find their niche in what they're wanting to do. And the money that's placed there, it's not something that they're going to place there and want to draw it out soon. It's something that they want to place there and allow it an opportunity to mature over the years, even into the years where they start having their own family and things like that. So it's something that they want to look at long term, continue to put money in it, allow it to mature. So no matter what they do over the course of their life, that money is going to be there for the retirement years. So these are just a few ideas that I have for you on how to introduce financial education to your children and include them in being intentional and being hands-on into their own financial legacy, in their own financial planning, own financial literacy, own financial awareness. So I hope that this has been helpful to you. Feel free to reach out to me. You can always send me an email at thewomantowomanpodcast@gmail.com. Again, that's thewomantowomanpodcast@gmail.com. I'd love to hear from you. I'd love to work with you to help you put the pieces together for your financial plan, for your financial future, in setting up your financial legacy for you and your family. Until next time, I am your host, Anntricia Bray Smith, your professional mentor and speaker.